Hey guys, welcome to another trading video. So yesterday, in the previous video, which was also about the 2nd of July, I talked about two trading opportunities that we could catch, and they were following the trend. And I talked about concepts such as liquidity and how the opening of the New York session can help us in order to basically to use it into our advantage. In today's video, or in this video, I'm going to talk about a trend reversal setup or position. And right off the bat, I want to mention that uh, reversals are very sweet. Like everyone likes to catch them, but of course it is very hard. The first reason is that why everyone likes it, because you will get a lot of more TPs, like generally, because it is the beginning of the reversal, and if you can identify it and then catch it, lucky you, you can get more TPs, and it is like the best thing that can happen to you. But every good thing, as every good thing, comes with struggles. It is the same thing with the market. So because of the advantages, it makes it very hard for people to identify it correctly and to enter it at the right time. If you enter too early, odds are pretty good that you can get a stops, or you can get a stop out. And one of the drawbacks of trend reversals is exactly this: you will hit uh, a lot of, you will get a lot of losses, or your stops will be hit too often. Uh, exactly because of the same reason that you cannot really identify the exact or the best moment for it. So you should know all of these. And why I am telling you that, in order to reach to the conclusion that trend reversals are not good setups for beginner level students, because of the difficulty and the mastery they need to reach before they can execute them very well. Uh, but I am going to teach it in any way. And I want you to really focus on the things that I'm going to tell. So in this exact basically scenario, in order for you to understand everything, I have to go to the 5-minute chart. Right now we are on the 15-minute chart, and by the way, guys, I only trade the Dow Jones asset, and in my opinion, it is much more decent for learners that they are building their foundation compared to other assets such as gold or other ones. So if I go to the 5-minute chart, you can see that first of all, on the 15-minute chart, we have the yesterday's highest high. So this is a very this is a key level for us. It's a level that we expect reactions from it. Okay, so this is very much important, and you have to draw the zone. And now that we go to the 5-minute chart, you can take a look at this last rally, and that it will reach this zone. So if you look at this last rally, you can see the price reaches this level, but immediately gets rejected. And so if you are in a long position, if you have already been in a long position, and if you haven't closed your position, this is the first signal that is telling you to be cautious. To be cautious that the trend has already gotten weak. Why? And how we can understand this? If you put your Fibonacci, and if you take a look at it, you will see that the retracement is more than 50% of this rally. So if it is more than 50%, it means that the sellers are strong. It is even like, I believe, like to 70%, it retraced the rally. So this is the first signal to be cautious. And what else it is telling you? It is telling you that even if the bulls or the buyers still can control the price, if still they have money, uh, they can, in the best case scenario, I am telling this in most of the time, of course we have exceptions, but in most of the time it is telling me that they can push the price until the last higher high. So if you are in the long position, you have to exit here, uh, because more than the 50% of the trade, the push or the impulse or the leg, whatever you can call it, has been retraced. Okay, and so this is the first thing. And guys, what do we call if the price can come up here and then go down and then can come up here and then go down, and it cannot give us more higher highs? What kind of cycle the market will get into that? Of course, we will get into the trading range. So in trading range, the basically the orders and the stops are not inside, it is outside of them. Okay, so the liquidity is not inside, but it is outside. So these are some of the things that you have to get them straight in your head. So the first thing, so here, when you see this breakout, do not think that the price can easily go higher. We have exceptions, but in most of the time it will not do this. So what it does is that a lot of traders, after they see this breakout, they will enter the position, and probably they will set their stop losses where? Under the swing. Very good. So what happens is that this big and bullish and strong bullish candle gets weakened a lot. I mean, can you see that? This big one suddenly becomes this doji bar. What does it telling us? What does it tell us? It is telling us that a lot of buys or these buyers, their orders have been absorbed, or there are a lot of resting liquidity pool sell limits here, or institutions are absorbing these buys. They are selling to these buys. So this is very important. So it is telling us that this was just a fake breakout, especially when after this doji bar we see a strong red candle that is taking back the level. So we see that we understand by the price action and by the behavior and constantly asking us questions, we see that the sellers are strong. So again, if you are in the buy positions, you have to exit your buy positions. And more than that, you should not enter a buy position, because this is not a good moment for it, because of the things I explained. So the price comes down again, probably hit or touches the EMA, or again, it doesn't matter. Again, the bulls try to get back the level. So as soon as again they break it, again in the next candle we see that it drops. So now you should, by these couple of occurrences, now you should understand in that moment that okay, both buyers and sellers, they have the inventory of orders and they are using it. It's like they have arsenals and they are using it, and we cannot understand who is winning and who is using. Probably they are very much how can I say, like equal. And this is a key moment for you. Usually after the three push, like 1 2 3, we have the last kind of liquidity available to any side, in this case to the buyers. So after the three push, we see this candle. It's a very strong bullish candle, but again, we should not enter the position here. Why? Because maybe this is another trap. Maybe it is another trap like this one. So we should see what will happen in the next candle, whether the sellers can take back or absorb all the buys. So you have to see. You cannot just by breaking this level, enter a buy position. You have to see the reactions of the sellers, because we said that both of them, they have their own arsenals. Okay, so as you can see, again, all of these, or I mean all of the buys again gets absorbed, and for the third time basically the sellers are able to reject the price. And this is a key thing to understand. Usually after the tree push, this is, as I told you, this was the last availability pool. If the buyers will get defeated, then the market will collapse or will shift. And one more time, just imagine if you were to enter here, where would you put your basically stop loss? For sure under the swing. Am I right? So as soon as your stops gotten hit or getting hit, the market starts to go down. Okay, so I actually entered this position on a 15-minute chart. And where I entered when the stops of here got hit. So I got 1 TP, but I identified it correctly. Okay, so if you wanted to enter this on a 5-minute chart, there are several basically moments. One of them was exactly after this swings, the stops of this swing gets cleared. You can do that, or you can do it after this candle, which shows like strong downward or bearish potential, or you can go to the 15-minute chart and exactly enter it after this candle. Why? Because you can see when this candle goes down, it will retraces, or it will print a very long lower wick. Okay, but the next candle fills this gap, so it is telling me that the sellers are still in control. And you may ask, then why the market didn't just go down immediately? Well, I don't know. But I mean, when I see that it doesn't do this, I mean, right off the bat, so it means that there were also other buy positions, because we were in the beginning of the like a channel phase. So this is an area that even lower than these we have like buy orders. And what it is doing here is that sellers are accumulating enough orders again to sell into them. And where that happens is exactly after this 1, 2, 3. So they are accumulating enough buy orders, and then with this candle they are just stepping in, and they will shifting the market from this trading range to a downward movement. And the final point is that you may now ask that until where we can be with the trend. Well, this is a very nice question, which you have to follow again the price action. Just the whole time of the video I was like just decoding what it means, each candle, what it is telling us. But so you should do the same, but also we have an idea that the price can basically come down until the beginning of the last impulse or rally or leg, whatever you want to call it in different methods. So I will be with the price until here, and which exactly gave me my TP. But should I exit immediately after it hits here? I would not do that. I would see what the price is telling me, guys. Okay, and that is for another video, but I mean like the signs that here we can see that the price cannot drop more, but that is not my focus anymore, because this will make the video even much more longer. But you can be with the price until the beginning, or what we call it origin. So I hope you find this video both interesting and also you learn something about the trend reversal and the things I talked here. I tried not to use a hard terminology because in my methodology I use them, I categorize them so that the people understand it better. But I didn't try to use it because I thought that maybe beginner level students are also watching it. So if you have enjoyed this video, just give it a maybe a like, or if you like some of these videos, guys, please subscribe to that. Tell me your point of view, if I explained things very well, if you understood them or not. And if you really wanted to get your training to the next level, you can visit my profile and you can book a class there. There is a link there in my profile, or you can simply go to superproof.com and under stock market category you can find my name. So I hope you enjoyed this video. Until next time, take care of yourself.